Welcome to Crescat's Market Call, featuring our macro and activist mining research. I'm Kevin Smith, Crescat's founder and chief investment officer. Before we get started, please read through our important disclosures being shown now. These and additional disclosures regarding the risks involved in the type of investments we will be discussing, as well as the fund's performance, can be found on Crescat's YouTube channel or on our website using the QR codes on the slides. The type of investments discussed on these videos can carry significant risks, including risk of loss. The videos are intended to be general discussions of macro investment themes, the mining industry, and news with respect to the companies in our activist metals portfolio, and are not intended to be investment advice or an offer of investment advice or services. Crescat's managed funds only accept accredited investors, and the discussion in these videos has been prepared with that level of audience sophistication in mind. Any forward-looking statements may or may not come to fruition. If you enjoy our videos, please click on the like button and make sure you are subscribed to our YouTube channel to get notified of upcoming episodes. You can also follow Crescat Capital on X for ongoing macro research and important news updates on our activist metals positions. If you want to learn more about Crescat's investment strategies, we encourage you to reach out to our head of investor relations, Merrick Iwahashi. His contact information is on the screen now and can also be found on our website at crescat.net. All right, let's get going here. We've got myself and Tavi here today. Quentin pre-recorded his segment before just a few hours earlier today, so it's pretty fresh. And I wanted to start by sharing kind of our updated performance through April relative to the Preqin database, because in a lot of the hedge funds they report, but it takes a while for them to report their performance and for Preqin, the hedge fund database, to compile all the results. And so now there's been a number of funds that have reported through April, which was, of course, the big turmoil month with the tariff announcements and then the backing off and the rally on the back end, which continued through May. But through April, Crescat's hedge funds had 3 of the top 10 performing hedge funds in the entire Preqin database of 1,360 hedge funds through net performance through April for year to date. And we only screened on funds that have at least a 3-year track record. And so among all funds that have a 3-year track record, we've got 3 of the top 10. And it is true, Crescat had been having a couple of years of not so great performance, and now we are approaching across the board new high water marks across all of our funds. And so we needed to deliver a good year in this turmoil year, and we've stuck to our guns on a lot of the big macro themes that we have. That we had been, while we had been early in terms of the market really starting to appreciate and respond to these themes, we, from a value perspective, from a macro perspective, we had a lot of confidence in our themes to really stick with them. And so even though they weren't performing, it was sticking with the primary themes on our long activist metals exposures, on our short Magnificent 7 exposures in the global macro and the long short fund, and the other thematic exposures that we have in those 2 funds that ultimately have been delivering the strong performance year to date. In April, we were pretty good in the global macro and long short funds about ringing the register, cashing in on a lot of the short positions that we had after Trump's Liberation Day and after that big down move that we had in the market. And while we have been scaling back into some of those short positions on this retest, it's now a full retest of the all-time market highs approaching here. We're not quite back to all-time highs reached earlier in the year, but we're getting closer. Personally, I think this is a retest that is going to fail. And so we've been adding to our short exposures in global macro and long short. And we think those are going to be important hedges to have on. Let's move on to the next. Now, this was a story that Bloomberg put out in their hedge fund newsletter brief, they pointed out that according to the HFR data, hedge fund research, the HFRX macro CTA index, which is a compilation of macro and CTA commodity trading funds that report to HFR. The macro hedge funds are having their worst start on record. Now, this is data through May, and of course it was a tough start through April too, but down about 5% on the macro CTA, which is the worst start to a year on record in the history of the HFRX data, which goes back to like 2004. And so macro funds are struggling because of these type of macro funds, especially the CTA funds, tend to be trend following funds, and to make big macro changes to their strategies, which they're trying to do, but as trend followers, they got whipsawed big time in the April and May moves in the market. As more of a discretionary macro fund that we run with this multi-thematic approach, we have, I think we're showing that we're different. We're different from the pack of your typical macro CTA funds, and this is a year where we're justifying, we think, what we do and our themes, of course. So let's go on to the next. Now, this is also looking at our performance now through May, and because that was what we were just looking at, was the macro CTA hedge fund performance through May for the benchmark. Our macro and our global and our long short and our global macro fund did have a pullback in May. X side pocket, the macro fund was up. Is still up through May, about 79.9% net. That's an early estimate of our performance through May. And remember, that compares to the HFRX benchmark of macro funds down 5% year to date. So we are really having a good year. I think justifying sticking with our themes. The funds are all really close to and are pushing to new high watermarks. And we are having a good month so far month to date in June. All of our funds are up across the board month to date in June. It's important to note that our precious metals fund and our institutional commodity fund, which is the newer institutional version of our precious metals fund, both were up in May. So even as our short positions were giving us trouble in global macro and long short, the precious metals and institutional commodity funds did push to new highs. So we don't show the institutional funds in that Preqin comparison, even though the performance here today is very similar to our global macro and precious metals fund. We have the institutional macro and the institutional commodity, again, very similar to the global macro and the precious metals fund in terms of strategy and positioning and performance here to date. Because they don't have a 3-year track record yet, we don't include them in that Preqin comparison, but they are performing great as well. And we do want to point out that we do have these institutional funds, and these funds are for qualified purchasers only. The reason that we launched these funds is that our other two funds we're getting full. We reached our 100 U.S. investor capacity in those funds, and so we needed to launch these new institutional versions that can take up to 2,000 clients each, but they need to be qualified purchasers. Let's go on to the next. So today was the employment report, And a lot of people might have thought it was a really good employment report because the jobs numbers surprised to the upside a little bit, still showing some strength in the economy. But I really want to point out that it was actually a very stagflationary type of employment report that did show higher average hourly earnings. And the much bigger thing, the much bigger trend over the last 6 months to a year, if not more, is that there has been a consistent trend of prior month revisions in the employment data down. And here's Marko Kolanovic, the former JP Morgan strategist, pointing out on X that what's the big deal about a 13,000, positive, surprise in the jobs number when the prior month was revised down by 95,000 jobs. And this has been a consistent trend that we've seen. So the underlying employment data has been much weaker than is kind of this headline number. Let's go on to the next. Similarly, Liz Ann Sonder, the strategist at Schwab, is also pointing out the same weakening of the employment data under the surface. May household employment was actually down 696,000 versus the 461,000 positive in the prior. It's month. It's the largest decline since December of 2023. So household employment, relative to the labor force, is actually weakening. Let's go on to the next. Similarly, she pointed out that the employment to population ratio just dropped to the lowest since January of 2022. So again, an employment data kind of under the surface of these headline jobs numbers that's showing a consistent weakening trend. Just more evidence for this general stagflationary environment that we believe that we're in. We believe it's an environment that is going to call for more multiple contraction among these really high valuation S&P 500 and mega cap tech stocks in particular. And we still have a number of short positions there. We think we're at it, still near and now a double top retest of a all-time high in the stock market that is likely to precede a much bigger downdraft, especially as investors start rotating money out of U.S. stocks into global stocks and into commodities. We do think this great rotation is still in the very early stages of unfolding, and that's why we're positioned the way that we are in this long activist metals portfolio and with the short positions. We have a number of other themes, especially in our global macro fund. I'm not going to go into them all right now. Tavi's going to talk more about some of them, but that's all I have for today. So let's move on to Tavi.
All right. Well, thanks, Kevin. Let me just make sure here, close one thing to improve my internet service before we get started. And there we go. All right. I would say that this last week, at least, we're seeing a huge shift in silver prices more recently that requires a little bit more of, at least of relevance in this environment. And finally, we're seeing what we thought we would see, a few years ago, which is potentially the beginning of a bull market in silver. And in my view, this is the beginning of a much longer secular bull market. And it's important to put this into historical perspective, again, without knowing for a fact or for anything that we have the crystal ball that this is the case indeed, that we're going to go through a secular bull market. But history is a good way to analyze things and in order to at least have conviction on investing, which that's what we do. And in the 70s, we saw a similar type of appreciation from a 10-year rolling change. I always like to go back and look at 10-year changes because the cyclicality of assets becomes more pronounced, and silver is no different than that. And we've been through a period of where silver has really underperformed. It's no surprise every time you mention silver, either on social media or with conversations with investors, most of those that are very skeptical, which are the majority, tend to say that, we've been saying this for a long time. And, some of them like to mention, you could have said this 20 years ago. And I would certainly argue against that. I mean, I certainly have not been talking about this for 20 years ago, but I think this is one of the most asymmetric opportunities in the markets, and continue to really like. And this type of price behavior we're seeing is extremely bullish in my view. Let's go to the next chart. Now, in the next chart, we're looking at the gold to silver prices, of which, if you notice, historically at least, we tend to see the beginning of a movement on the gold price first. And the reason for that, it has to do with the fact, at least in my view, it's not easy to get into the risky parts of the market at first. What we tend to see usually is people tend to navigate on the easy assets that are also much more, easier to, as well to understand. And gold, given its history, given its lower volatility profile, its lack of allocation across most institutions, was certainly the one that has started the movement that we've seen so far with precious metals. But as you can notice in this chart, silver, it gets to a point where silver tends to take over the leadership of this upward movement in precious metals overall. So the blue line tends to actually lead to the upside at later stages. I wouldn't say late stages, I would say later stages. In my view, we're at the very early parts of potentially what could be a secular bull market in my view. So it is important to see that gold has potentially led the way, but there's a lot left for the blue line in this chart, in my view. Let's go to the next chart. And it's also important to start seeing, and it took a while. If you recall, first we saw gold prices moving. There was a lot of skepticism not too long ago about the metal. And I remember very well speaking with investors, and I'm sure Kevin remembers this very well. And one of the most asked questions to us was is Bitcoin going to replace gold? And we don't even get that question anymore. I don't even remember last time I got that question. And the second question we got the most was, when is the lagging of miners going to end? I mean, is this a structural change? These are not, in our view, structural changes. These are just normal lags that are a lot of times a great opportunity. And so the same thing is happening in the silver space. You're seeing finally silver starting to outperform gold. Lots of people have come out and said that the gold to silver ratio is a structural change as well. It's going to stay above 100 for a long time. That's certainly not my view. I don't think it's anybody else's views here at Crescat. And so the other thing you start to hear is that, silver miners are also not going to perform very well. And we're starting to see the junior space, or the earlier stage companies in the mining industry that have exposure to silver prices are beginning to outperform silver itself. Of course, it's a very early stage. As you can see, this is a very long-term downward trend that we're potentially breaking. And if so, this could be the beginning of also a place where could be very attractive for investors as well, in our view. All right, let's go to the next chart. The next chart now, we're looking at copper prices, of which it reminds me a lot of the gold prices a few years back when we had this 2000 key level with bump at that level and then sell off. And most people would say that that was a triple top. Triple tops are a thing. And in our view, that wasn't a thing. That was just triple tops, in our view, technically speaking, don't really exist. And so what you tend to see is a breakout from those levels. Now, you're not looking at a triple top here. Maybe there's 5 tops or something along those lines. But I think it's important to see this type of resistance. It's a historical resistance, not exactly at a 5 level, but it's very close to that 5 level. Yes, we did go above the $5 per pound at copper prices, but not with authority. And I think once we do break that level, if we do break that level, I believe that's we're going to get into that price discovery moment, just like gold did. And that's usually when assets tend to push a lot higher very quickly. In the gold example, we went from 2,000 or 3,000 very quickly. And so I think the copper can experience something similar as well here. Why I think it's worth paying very close attention to this, because oftentimes metals are all correlated, and so when gold prices lead the way and people start looking for more risk, copper, silver, which carry more risk and are more volatile metals, are usually the next ones in line. Again, those are all historical analysis. Let's go to the next chart. Next chart is something I've been trying to work on myself, is understanding. I think it's been well reported by a lot of folks how much central banks have been buying of gold. But if you do a simple analysis of how much volume we've seen in markets and how much of a movement we've seen in prices, the declared or official purchases that have been reported so far are far from potentially explaining such a large movement in gold prices. And so it brings up the question of, are we seeing unofficial or undeclared purchases by central banks or other institutions? I am of that view. And so Bloomberg actually came and worked on a chart that is showing the blue line or blue bars are basically estimated purchases by them. And the yellow lines are essentially where the declared purchases are. You can see that gap between the two. I mean, I would suspect that if you go back in history, this is a moment where we probably haven't seen that level of gap in a very long time. I would also mention another thing that is important here, because it reminds me a little bit about the crypto asset strategy. I mean, it's been a lot of conversations about how the government would actually come in and buy crypto assets, and including Bitcoin, Ethereum, and others. And I've always operated under the assumption of, okay, well, if we are indeed in a place where if let's say you're running a large institution, that any movement you make in markets, you essentially move the price. How would you operate under that assumption? Would you announce to the world you would be buying crypto assets if you're very serious about accumulating them, or would you buy them first and then announce to the world? Most likely, those institutions would work under that assumption. And so I suspect that the fact that we haven't heard of any strategic reserves in gold, it's actually extremely bullish for gold. And so I think that this chart is more accurate than a lot of people think, and potentially could be even higher in terms of the blue bars. But again, these are just analytical tools that we're using to try to estimate what we think it's really happening under the radar of what's been reported in terms of purchases. Let's go to the next chart. And the next chart is production, and that's the supply side of gold. The supply side of gold has been nearly flat all the way back to 2017 or so. Is that 2017 or 2018? And that is a really interesting chart, because from 2010 all the way to 2018, we saw a pretty significant increase in production, increased by almost 1,000 metric tons. And this time we haven't seen any increase. And for a fact, we know that there are no new projects that are really large to make a big change in this production profile globally that are supposed to be coming online anytime soon. And so the production side of gold is likely to be very flattish for the next few years. And if that's the case, that gives you even more conviction that if demand stays as strong as it has been, this could be extremely constructive for the metal as well. And so always good to look at the supply side too. Let's go to the next chart. On the next chart is it was posted by Zero Hedge 2 days ago. I thought it was interesting. In fact, we did a similar research in prior letters in regards to our views about the treasury market. I find it interesting what's been happening with the whole face-off between Trump and Musk. To me, the level of political and fiscal instability that we're seeing today is remarkable, and also no different than what probably we see in most emerging markets and even other developed economies like Europe or European countries or Japan or Canada or Australia and so forth. And it makes me question, actually, why do U.S. equities get a premium over other economies when actually most of the landscape that we're seeing to invest is no different than those other areas in a lot of ways. And so I'm starting to question more and more why we see a premium in the first place here. It's slowly merging, morphing into an emerging market place, in my view, as far as the level of instability. But not just specific to the U.S. I mean, most other countries that are developed are also the gap between, or the difference between those two economies, developed versus emerging markets, have certainly been closing over the last few years, which again justify maybe the reason why one would want to invest in emerging markets as well. But you can see here the trajectory that we're probably going to see levels of debt reaching close to $40 trillion here very soon. And if that's the case, some people usually ask me the question, like, what would you make change your views about gold? I was asked that question yesterday. What would do to your thesis in order for you to change your views? And the answer to me has always been, I think it's a trend of debt to GDP levels is starting to fall, that are not caused necessarily by inflation and rather by real efficiency changes in markets. And maybe AI can be the answer for that. What I actually challenge people on that view is that in order to get to a point where AI will really transition the economy into a very efficient system, I would say that we need to build a lot of things. We need to build robots. We need to build data centers. We need to build the electrical grids. And I don't think, before all that, we need to build the foundation. And the foundation requires materials, and materials require metals. And so I would think that first we need to see that unleashing in the markets that we haven't seen yet. And then on the back of that, construction, a boom, and all the changes we may see, I believe that we're going to get to a world where efficiency will take place in a very significant way as well. But anyways, let's go to the next chart. Next chart is a great example of why we think that the U.S. is becoming, in some cases, even worse than other economies. I mean, look at one of the most important places is to look at the net interest payment relative to GDP. We're running close to 5%, while any other economy that you look at this chart is substantially lower. You've got countries like Greece, Japan, that have been all over the news about their rates moving higher and fiscal indiscipline. Wait a minute. Japan is way lower and much more disciplined than the U.S. in this metric, which is a very important metric. That is, who cares about your rates moving higher? At some point you want to understand especially how much are you paying, how much to service your debt relative to your GDP. Currently, the U.S. is having to run its economy to grow at about 5% just to pay down the debt. And so the amount of growth oriented spending that we're seeing in the economy is shrinking relative to how much we spend just to pay down the debt. That's an issue. And so, I worry that's eventually going to cause what's the next chart actually. The trend that I've been very focused on. Can we go to the next slide? Which is the dollar eventually, and the dollar is linked to emerging markets in a yellow line. I was talking about copper here, and I think that copper, as we build up the economy and other things, we're going to need metals. To me, copper is on the brink of a major breakout. And as you look at emerging markets as well, which is in the yellow line in this case, and the green line is copper prices. Do you notice the similarity? I mean, I think it's outstanding. The correlation here that we're looking at and the level of similarity of these two lines is really pronounced as well. And what I would say to this is that, and by the way, you can do the same chart using emerging markets, including China. I just want to make the point that when you do that, a lot of people tend to say, well, that makes sense because China is one of the largest buyers of copper. No. We're not including China here. In fact, it's just looking at Asian, Latin American economies and others, African economies, and excluding China. And you still see a real strong link, if not stronger than when including China. And so to me, these things, while people tend to separate them, they're kind of in the same place. They're kind of in the same boat eventually. And so if I'm bullish gold, if I'm bullish the miners, if I'm bullish copper and silver, I think by definition, you should at least consider emerging markets as well. Let's go to the next chart. One thing that has been happening that I think it's also, I wouldn't say shocking, but there's a trend happening under the surface as well, along with this buildup that we're seeing due to AI and onshoring. It's been this buildup as well of computer equipment as far as spending. And if you look at the GDP, this number of how much computer spending has been contributed to the GDP growth is about 1% in the first quarter. It's the largest contribution we've seen in the history of this. Now, of course, going back to before the 90s is kind of less useful here, but at the same time, you can compare this with the 90s because we did see the internet revolution and so forth did cause computers to become also more popular tools in the economy. And we did see a gradual increase of the spending in that space. This time, however, you can see the huge spike that we're seeing now. And to me, it goes to show again, if we go to the next chart, how I believe that a lot of these models are potentially off when it comes to what we're estimating in terms of potential electricity consumption per decade. This chart is looking at the annual average, the average annual growth per decade of electricity consumption. And the blue lines are looking at the McKinsey estimates. I suspect that those estimates are actually underestimating what we are likely to see. I believe that we're probably going to see a lot more growth in the U.S. specifically when it comes to electricity for a lot of reasons. I mean, there's not just AI. AI is one side of it. You have also onshoring that I think it's extremely relevant to this discussion because if you're wondering what it takes to actually bring manufacturing and industrial capacities back to a country, look no further than China's electricity consumption over the last 15 to 20 years. And I think we're going to go through something similar if we're going to bring things back to the U.S. I do think that that's a real trend in terms of people really rethinking their logistics and dependency in countries and so forth. The U.S. is not the only place that is going to be onshoring. I think the U.S. is one of the main places that are leading that revolution. But I think we're going to see a lot more of that, given the fact that we do have deglobalization still intensifying in the environment here in the U.S. and globally too. All right, let's go to the next chart. In the next chart, how do we get to a world where we're using metals? How do we get to a world where we have, the energy that we need, the transition of energy to be actually, getting to our homes and data centers and so forth. And how do we get to that whole electrification period that we're potentially seeing here? And continue to have the mining industry such an irrelevant part of the economy. I think that those two things have to come together at some point. And so I believe that lots of discussions have been made about natural gas, nuclear as a potential change in the future, solar energy. People have talked about grid, modernization. You tend to talk about the increase of pipelines and industrial capacity and all that. But no one is really talking about the fact that what we really need is metals. And even Elon Musk himself has talked about, well, we have enough copper out there. Yes, underground, not above ground. And to get those metals above ground available to be used and to help us to build things, well, we need to spend capital for this. A company or a group of engineers have put together an interesting research of estimating somewhere close to $1.5 trillion that needs to be spent in the mining industry globally, in the U.S. Over the next 5 years. Okay, well, globally, the mining industry is worth about $2 trillion. If just in the U.S. alone, we're going to see $1.5 trillion of spending. You can do the math and see the level of asymmetry that we're talking here. So I like that for those reasons. I think that the fact that we have limited supply and depressed capital spending is right at the core in the center of the thesis to invest in the mining industry. And I, listen to, or, you can read to our most recent letter, which is basically about how the mining industry is a necessity. And so for the global economy. And so I think more and more people are going to start shifting away from the value proposition of investing in the mining industry, of which I could argue all day long that that's still there. But moving even from that into and really morphing into the idea of how strategic this has to be, and how we are dependent on the mining industry. We have to spend more capital in order to allow other things to occur in terms of the development of the economy itself. All right, let's go to the next chart. Now, there's a trend happening as well alongside all this, which I just mentioned as well, was the dollar. The dollar is also at the center of all this. And the administration is focused on the trade balance, trying to onshore things. And what is in the middle of all that? It's the devaluation of the dollar, in my view. The dollar is at one of its most overvalued stages that we've seen in history. We've only seen this twice, how overvalued it is. Number one is basically what we saw in 1985 during the Plaza Accord, and also right after 1934, 33, when we saw devaluation of the dollar at that time as well, with Roosevelt, that actually drove that devaluation at that time too. But that was a more of organic devaluation relative to other currencies. What are we likely to see today? Is this just a one-off kind of year, 2025, which we're on pace to be the worst performance for the dollar in 30 years? I don't believe so. I believe this is the beginning of a trend. You can look at the next chart, in fact, and of which it shows, let's see the next slide, please, of which it shows the cycle of the dollar. And it goes back again, just like silver, we're stepping back and saying, all right, let's take a 10-year rolling change calculation of the DXY index. And what do we see? Well, to me, we're seeing the beginning of a downward cycle for the dollar. And, none of us have a crystal ball of what's going to happen here. But I do think that there's enough reasons to believe that the dollar is likely to be more and more challenged. Not that we're going to lose the reserve currency status or anything along those lines, in my opinion, but that very likely the dollar needs to be devalued in order for us to function the global economy. I think the dollar is way too strong right now. And as we see that, lowering the pressure of the system, I suspect that we're going to enter a place where these FX trends, they tend to be very long-term oriented. And so I suspect that we're in the beginning of one of those that could last for another 5 to 10 years even. But again, those are just views of the firm. All right, let's go to the next chart. You can see a few signs of these things, right? I mean, just like gold led the way, you saw gold leading the way, and now you're seeing the silver movement. Now you're seeing the senior producers doing well. There's still people questioning, no, this is just the seniors. We're not going to see the juniors. And then you're starting to see the developers and some movements in the exploration, and people are still skeptical. I believe these things are contagious. It's logical to me that investors that have made money in gold are going to be looking for the next gold and the next silver and then the next miner, and it go down and down and down, and that's how you end up trickling down to the entire industry. The same thing is happening in FX as well, in my view. The British pound has been the first one that I noticed that broke out. So you see this major breakout in the British pound relative to the dollar. This is going back to 2006, as you can see in this chart. So close to 20 years of a downward trend, boom, and popped up and then retested, and now it's moving up again. Let's go to the next chart. The next chart is the euro. Guess what? It popped its head above the same downward trend. And guess what? When I was at a conference in Switzerland in November, I asked the question to the audience: how many people here, raise your hand if you think that the Canadian dollar is going to do better than the dollar? You know how many people raise their hand? 0. I've told this story before. I'm trying to not be repetitive, but it's an important point, because when you go to the next chart, and that's in the next slide, everyone is doubting that that's going to happen as well. Well, we just saw the British pound. We saw now the euro. And I think that the Canadian dollar is about to see the same thing. And then you go look at the Canadian dollar CFTC positioning for speculators that is reported on a weekly basis. And you look at that relative to the total amount of open interest on options and actual outright positions. And guess what you find? Is that we're seeing one of the most bearish stances by speculators in history of this security. So, I'm not saying here that we're going to see a short squeeze or anything like that, but those are sort of the recipes or, the foundation for something along those lines that could happen. And so, I believe that the Canadian dollar is arguably one of the cheapest currencies out there. And so at Crescat, we choose to actually not hedge the Canadian side of holding Canadian assets, given the fact that we have a lot of mining companies in our portfolio that are trading in the Canadian exchange. Of course, those stocks trade in the Canadian dollar. And so as you own those things, you also own the Canadian dollar. So some people like to hedge the Canadian dollar exposure. We actually have the view that that's also prudent to have some Canadian dollar in this environment. And given the fact that you're looking at this chart, is just one example of the overall thesis that we think that the US dollar is also very overvalued relative to other fiat currencies. Again, that's our view after a lot of research as well. Let's go to the next chart. I'm almost done, promise. Just a few remarks about the markets, equity markets, because it's important to emphasize we've seen a real, I would say one of the very strong rebound of the market overall since April 7th, I believe, was the very bottom of the market recently. And I don't think that that's the actual bottom. I believe that we're probably going to see a retest of that bottom. So what are the things that make me have that opinion? Well, let me start with the fact that the Russell 2000 relative to the S&P 500 continue to point lower and lower and lower. And in fact, we're almost retesting the very bottom the very peak of the tech bubble. As you can see here, the Russell 2000, the small caps, were really underperforming the equity markets back in the early 2000s. That was what also marked the tech bubble. I think this is happening again today. Now let's go to the next chart. What has contributed to this growth in the market? Well, if you look at the market cap growth, about 54% of that growth came from one place, Mag 7. The Mag 7 companies have really contributed to a huge amount of this Mag 7. Somebody just mentioned your ratio is upside down. Go back real quick, just so I can make that point real quick. Can you go back? It's not upside down. It's the Russell 2000 relative to the S&P 500. So if you're very low in this environment, it means that the small caps are underperforming the large cap names. So I just want to make sure you understand the chart. That means that you're not seeing the broadening of the breadth in the market. It's really being driven by the large cap companies. So therefore, this chart is falling. So try to understand the chart here because it's very, very important. Let's go to the next. Let's skip to another slide here. Yep, next one. This is something I noticed personally. This is just a personal experience. I bought a new phone, and not because I wanted a new phone. I just, I was due for a new phone, I guess. I received a message, and I went there and got a new phone. So I went there and changed phones, and usually, you get a little bit excited. You're like, oh, this is a new phone, and I'm sure it's going to be somewhat different than the prior one that I had. And I haven't changed phones in, 2 to 3 years. It's just been busy. I don't usually change phones all the time, and so when I saw it, I was shocked by the fact that there has been zero, at least from my knowledge, changes in terms of innovation in this phone. And I don't understand this because when you look at the actual Apple, this chart is basically looking at their earnings or their free cash flow, which has been flat down for the last few years, as you can see in the red line. And the prices have been continuing to go higher. It's also being challenged by the China-US issues. And so, this is, another one. I think it's now the second, not the first, not the largest company in the world, but I would say that there's, in our view, there's a lot of risk to Apple in this environment as well. All right, I think there's one more chart, and that's it. My last chart is a comment that has been changing over the last, I would say, few weeks, of people saying that there's a lot of money in the sidelines. And the reason why they say this is because if you look at the chart of money market funds, they going straight up, right? I mean, it's like the chart of money supply. It's like the chart of the U.S. debt. But what people don't talk about is that, money, the amount of capital that has flown into money market funds, which are very close to cash, or, a lot of people tend to say that that's usual calculation that you say of how much capital is in cash waiting to be deployed in the market. But there's another thing that's been happening too. The equity market has gone up a lot too. So when you look at the calculation in nominal terms, I don't think that's the right thing to be analyzing. You should be looking at that relative to the size of the equity market. And when you analyze from those lenses, you can quickly see that back in the 2009 bottom of the market, there are close to 55% of money market funds relative to U.S. total equity market. And now we're below 13%, 12%. Well, I don't think this is really, if anything, I think there's a lack of dry powder in the market. All right, that's it for me. There's one more thing. Okay, that's the last chart. Lower lows trend that I'm noticing in the 2-year yield. Now, I think that goes right in hand with the equity market bearishness that we have. I would emphasize that view right now because of this, how much we've seen a rebound here in the markets. And I would say that one of the things that I at least have a high conviction on is how two-year yields are, in my view, poised to also move lower. And so as we see a stubborn Federal Reserve, and eventually that can drive the economy to hit a wall. And as we see the economy hitting a wall, in my view is that that's going to get reflected on the 2-year yields. And most likely the chart in the screen is, in my view, also likely to fall substantially. So it is one of at least my opinions. And so I think that's my last chart. So I'm going to pass it on to Quentin, of which has recorded his presentation. So let's go on with that.
Hello, everyone. Look, once again, I'm recording this a bit before the actual airtime on Friday afternoon. I'm actually in Australia at the moment. I'm down here for some meetings to discuss exploration strategy for Novo Resources. So, as you can see behind me, it's dark right now. It's about, it's about 10 p.m. or so. Actually, because we're ahead of time, it's more like early morning in North America. But if I miss a few news items, it is simply because I can't predict what's coming out in the future. But let me start with a little update. It's not necessarily a news item, but I have been down here for a couple of days and meeting with my team about our new projects. The ones that are circled here in yellow on this image are relatively new projects that we've added to the portfolio of exploration projects for Novo. And quite frankly, these are turning into some very exciting opportunities. They were cheap acquisitions, either through land staking or through very, very cheap deals, but all are high quality projects. So I'm going to talk briefly about the 3 that are in yellow here. 2 of them, you'll notice, are in the inset in the lower right there. Okay, what is that? That's way over in the southeast part of Australia in New South Wales, which is one of the states of Australia. And those 2 projects are one's in northeast New South Wales. That's in New England Fold Belt. That's where this John Bull project is. And then the other one is in the northwest corner of New South Wales. That's the Albert Goldfields. And it is the Tibooburra project, which is a very interesting gold occurrence as well. Onslow, which is the one over here on the left-hand side of the image, is actually up in the Pilbara region where we've traditionally operated. And then we also have, as you can see, many dots there, which are our existing exploration portfolio, including the Edge and joint venture, the Karatha project, Bala Bala, and then down here in Victoria, we got Belltopper. All right, but I'm going to talk about the three in yellow. Let's go to the next slide. All right, this John Bull project. Again, it's in the northeast corner or northeast quadrant of New South Wales. It's a relatively remote area, but it is unique geology compared to much of what you find in Australia. This is not a classic greenstone belt gold system or something like that. This is actually a belt of rocks that is very, very similar to what we see in the Yukon. A lot of similar sedimentary rocks, shales and sandstones and things like this, but we also have reduced intrusions. Yes, reduced intrusions, much like we see in the Yukon. And in fact, interestingly, the age of rocks, both the sedimentary host rocks as well as the intrusive rocks that we find in this region, are very similar in age to those in the Yukon as well. Kind of makes you wonder if maybe North America and Australia weren't closer to one another at some point in time way back in history. All right, but this John Bull project, even though it's way far away from the Tintina Belt, it does have a lot of similarities. In fact, there has been a limited amount of historic drilling here with some long intercepts. You can see them in the bullet, the second one from the bottom, 68 meters of a gram, and then you got 94 meters of 0.95 grams. These are early stage results in what I think is a new discovery. Our team has been doing systematic mapping and sampling and also expanding the soil grid. And you can see right now the soil anomaly that they've generated is about 1.3 kilometers from north to south. And in that soil grid, there are several multi-gram samples. There are actually samples in the soils that are coming back very high grade. We think this is very encouraging. I've looked at the style of mineralization here. I can confirm that it does appear to be a reduced intrusive style system. We have alluvial gold coming off of most of the drainages that looks classic for these types of systems. I'm very excited about this because it could represent a brand new type of gold deposit in Australia. Okay, we're going to be drilling this starting in about 2 weeks. We have some very choice targets lined up. I think this is going to be one of the more exciting gold stories happening in Australia very soon. All right, let's go to the next slide. I'm going to talk about Tibooburra, which is in the northwest corner of New South Wales. And this, even though it's a long way from the Victoria goldfields, this geology resembles that in the Bendigo fields in the Victoria. Okay, this is basically an orogenic gold system. And in places, this is very high grade. There's some bonanza grades, which make it similar to some of the epizonal, shallow level orogenic gold systems that we see down in Victoria, like Fosterville. I think this is an exceptional project, but it is a big project. Okay, there's a lot of strike on these shear zones that you see on the image on the right-hand side. And we have decided to focus as a first test around this clone target. Okay, this clone target, which is located along one of those two red lines, which are basically shear structures, seems to be the focus for a series of fairly high-grade veins or high-grade intercepts that have been encountered in the past. You can see 7 meters, 7.3 grams, 9 at 6 at 4.2, but 31 at 1.29. There's also disseminated mineralization there. All right, so we are now testing this in the hopes of finding a high-grade chute or high-grade pipe that plunges northward from this near surface area. And if so, we'll have a lot of more confidence to tackle this thing and tackle some of the other targets that are along these shear zone structures. Okay, we have New Bendigo and then Pioneer to the north, both wide open. We're going to test clone, see what it delivers. If we have a predictive model we can use for further testing here, we will come back and drill more. But again, high level epizonal gold system. It does have high grades in places. And I think this one's it's off the beaten path, but it's certainly a high quality target. one of the few that's left in Australia. Let's go to the next slide. Okay, Onslow. This is a unique area. It's way off in the northwest corner of Australia. It's in the Pilbara region, but it's on the west side of the Pilbara, so it's way far away from many of the other targets that we've tackled as a company over time. This is an area where there's a convergence of geology that is very, very interesting, very unique. It basically is a place where you have a large convergence of structure, and you also have a lot of intrusions, which are those pink geologic formations on the map on the right-hand side that have intruded and come up in this very, very tightly, we'll call it compacted zone of geology. Okay, now why is that important? Well, those intrusions seem to have brought metal. There are historic occurrences throughout this area that have considerable gold, silver, but also base metal as well. And we're quite interested because this area has never seen systematic exploration. There's been very little exploration here, but it has all the right ingredients. And it is an area where we've gotten in very cheaply through land acquisition, and we can expand from here. But we have already some very high qualities targets that are being generated by the work that we're doing. There will be more news on this over the next few months as we collect that data and put it to the market. I think this is a unique gold polymetallic project that has really seen no love whatsoever in Australia yet. But we're going to tackle this one. This is a very exciting program. In fact, I think our team is probably most excited about this. I get very excited about John Bull because it's classic reduced intrusion at tip of Burra, of course, epizonal, love them. But this one has some really, really interesting features to it. So this Onslow district, or Toolunga, as they call it, is yet another part of our portfolio for this upcoming season. Let's go to the next slide. Now I'm going to jump into a story that we've entered recently. I did mention this, I think, twice now in videos. Westward Gold. This is a Nevada explorer. I actually joined as chairman recently, and it's because I have a lot of conviction around this story, around the target, around the people that are involved in this story, and their ability to make discoveries. All right, so we are in north central Nevada for reference. Let's go to the next slide. And the first thing I want to show you is an interesting image that they put together. In the middle of this image are listed a large number of very large Carlin-type gold deposits that have been found across north central Nevada. Okay, these deposits have been found by team members of Westward. Okay, there are some of the highest quality team geologic team in Nevada in this company. We have people that I've worked with in the past, some distant path. You know, I'm getting older. And I just have a tremendous amount of respect for all of these guys and what they've done over the years. These are the people that have truly found and you know, led to these discoveries across the Great Basin. We're talking probably over 100 million ounces just represented in the list that you see right there. Okay, so these guys know how to find deposits. Now we're going to jump into a little bit of detail so you can see what this story is. Okay, why am I presenting this now? Very important. They are going to be drilling in about a week and a half, 2 weeks, something like that. Around June 16th, this is going to be the inaugural drill program for this very exciting story. Let's go to the next slide. Okay, I put this image together. This is actually a snapshot from Google Earth, and it shows the Cortez region. This is the Cortez mining district, which is a Carlin predominant district. There's a few other odd deposits kicking around, but most of the gold in this area has come from Carlin type deposits. And the biggies are the ones I have in solid yellow circles there. You got Pipeline and Gold Acres. Collectively, there's probably over 20 million ounces of gold that's been mined in that area. And then Cortez Hills, well over 20 million ounces within that circle. And then down at Gold Rush, even though it's early days for Gold Rush, and I think they're just developing it, they're getting close to production. You know, there's on the order of 10 or 15 million ounces down there. Okay, so there's a lot of gold in this district. Of course, Red Hill, which was New Legacy's ground, is off to the lower right. Not a discovery, but I think it's a very important part of this district. But there's also a very important part down there in the center of the image. There's a place called Toyabe, which is a very small kind of, it's a Carlin mine, but it's off the beaten track. Okay, it's a small mine that's just for some reason way off to the southwest from the other big deposits in this district. And it's always been a bit of an enigma. Like, why is it sitting way off by itself? Well, if you look at the dashed orange circle that's right next to Toyabe mine, that is the target. That's where the Westward is focusing its efforts to find a big deposit. Now, why have I put this on there with arrows and then another dashed circle? It's because of this. Okay, you can see that white basin that jogs through there. It looks like a sock or something, you know, if you look at it with the right eye. That is a big salt lake, a salt pan, and it's in a valley that's basically opened up. Okay, it's opened up through extension across the Great Basin. The crust has been pulled apart like an accordion, and you get separation as one mountain range is pulled away from another. You get basins that form in between. So that white thing is a basin that marks the zone between which the Toyabe area, that mountain range, has been pulled apart from the range over here towards Red Hill. Okay, if you can imagine in your mind's eye pushing that back, push it back to the southeast, that dashed orange circle would have originally been in a position about where I've shown it on this image. Now, why is that important? Because now you can see why this collection of very large deposits actually might continue down, and perhaps this rifted part, this part of the Cortez area that broke off, might actually be part of that bigger system that you have to the north. Okay, so that's the structural framework here. Let's go to the next slide. This shows the land position that Westward has. It was put together over a series of consolidations over time. I won't bore you with the details there, but they do have 100% control over this thing. And notice that the green area that's off to the west there, that's Barrick. Okay, that's Nevada Gold Mines, which is the joint venture between Barrick and Newmont, as well as Barrick on its own. Barrick owns ground outright here too, and that's the old Toyabe mine. Okay, but these guys at Westward have done a great job consolidating the ground where this rifted part of the Cortez Trend is situated, and now they're exploring it. Okay, and we have a great team who can do the hard work to make that happen. Go to the next slide. All right, the geologic map that you see here on the left is we'll call it the high level government map that was available to the team when they first entered here. And what are we looking at? Well, the purple rocks OV, that's what we call the upper plate, the Valmy or Veneti formation in this area. Okay, this is rock that was thrust over the blue rocks that you see there, DW, which is the Devonian Windband formation. So even though we're looking down on this, if you can imagine your eye, the purple rock would be over the top of the blue rock. Okay, and where Mother Nature has kind of eroded away the purple rock, it's cut down and exposed that rock underneath, that blue rock. Okay, now these guys are team members like Steve Keller and Rob Eady and so forth, went out and they did detailed mapping of this area, and you can see they've refined the map greatly over here on the right hand side. In this case, the pinkish purple is the upper plate. Okay, so they still recognize the upper plate for sure, but now they have a very, very well defined map of those lower plate rocks. In this case, they're kind of teal or baby blue color. Okay, and that's that Devonian Windband formation. The Windband is the unit that hosts 90% of the Carlin gold in the Cortez area. That's why this is so important. They basically have identified an area where you have a lot of Windband sitting right underneath a large cap of upper plate rocks. And that's the kind of setting where you can find big Carlin deposits. Okay, so this is quite exciting. The geologic setting is there. Now let's look at other data they have. Let's go to the next slide. Okay, now you can see they have several things shown here. They got alteration, which is kind of that patchy pinkish red, those blobs that you see there. And that is called the Courtney zone. And that actually falls, you can see it kind of straddles the boundary between that Devonian wind band, the lower plate rocks, and the pinkish purple rock, which is the upper plate, Venini. But it's showing you there's a hydrothermal system there. Okay, this is very exciting. Now, the campfire target, which is off to the east of that, you say, well, why is that important? Well, the mapping that these guys have done has identified what we call an anticline. It's an upfolded portion of rock that trends through here. And oftentimes we find that the best Carlin deposits are kind of tucked up in these anticlines where there's a bit of a fold. Maybe the fluids came up, kind of pooled or trapped underneath that arch. And this makes for a very compelling target. Now they have gathered a lot of other data. So we're going to take a look at that. We're also going to look at a cross-sectional view that goes down the axis of the campfire here shortly too. Let's go to the next slide. Okay, so the data that you see here that's kind of just dogpiled on the right-hand side is basically a compilation of different forms of geophysical data as well as geochemical data. Okay, it's a bit confusing, and alteration too, rock alteration. So hot fluids alter the rock. What do we see here in yellow? We see basically an area that's identified as hydrothermally altered. So basically there's good evidence there's a big upwelling of hot fluids in this area. Okay, so that's great. That's great. Now you can see a lot of little color polka dots in the background. Those are rock chip samples. And in fact, mainly over the Courtney zone, but trending over into the campfire zone, they have found quite a few samples at surface that are significant in gold, oftentimes up to multi-gram. Okay, so there is gold at surface here, mainly in that wind band formation. Okay, it's mainly in the wind band formation, but if you can imagine that wind band dipping underneath that upper plate, maybe that gold continues. Maybe that cloud of anomalous gold is actually telling us something more. Now, the blue and the red are what we call ZTEM anomalies. They're basically electrical anomalies or electromagnetic anomalies, and they happen to be coincident in this area, and they happen to be right underneath that altered zone. So again, we kind of see a geophysical expression, we'll say, of a hydrothermal system here, or potential hydrothermal system. And then we have in white, we have what appears to be evidence of a potential magma or some sort of magnetic feature at depth. And that's actually, identified from ZTEM data as well. All right, so we have kind of a dog pile of a lot of different data sets that have come together here that kind of, and don't forget the anticline, which is basically along that kind of light green axis. We have a lot of things happening in one spot here that tell us, hey, there could be a very, very nice structural trap for a big gold system right underneath this campfire target. All right, well, let's look at this thing in section. Go to the next slide. Okay, so this is basically a long section that looks at the profile of the campfire target. And you can see the blue units that come up to surface here. That's that wind band, and that's that favorable host rock. That's the rock that hosts most of the gold in this Cortez region. And then the light purple that you see capping it, those are those upper plate rocks. And notice that the fluids, in this case, in this model, what they're showing is the fluids came up and they kind of pool up underneath there. It's kind of hard to discern the anticline because basically the section is going down the axis of the anticline in this image. But if you kind of imagine in the third dimension, this is kind of arching in and out of the page, you can imagine, the fluids are coming up and they're coming underneath that arch, and boom, there you go. Nice trap. Could form a very, very big deposit. All right, so that's the model these guys have developed based on the data they're seeing. And all of this geophysics, you can see the little black lines at the top. They point to this evidence that we have of a system in the subsurface. Now, what they've done here is they've taken a little tiny cross-sectional image, and it's at the same scale of the Cortez Hills deposit, which is not too far. If you want to, on YouTube, if you want to go back and look a few minutes ago when I was talking about this area, Cortez Hills is immediately to the north. It's about 10 kilometers to the north of this campfire target. And that profile, you can see it looks a heck of a lot like what we see over here. In other words, at the same scale, we have basically the same things going on. There's some upper plate rock in that section. I know it's tiny. And then you have the wind band, which is the blue, and then Roberts Mountain. So anyway, you can just look at that and say, yeah, that looks a heck of a lot like what we see at Campfire and similar scale. Okay, what does that mean? Well, we could easily host a Cortez Hills scale deposit at Campfire. And that's the dream here, to find something similar in scale, similar in size. And what does that mean? Well, I think Cortez Hills, I think they've mined at this point, they mined many millions of ounces, but I think the whole system is north of 20 million ounces yet. So a big prize, guys. This is a big prize. This is definitely elephant country. And you can see some of the holes they've planned, those black dash lines. We're going to test this year, and we're going to hopefully make a discovery, maybe the next great discovery in the Cortez area. All right, so that's that story. Let's go to the next one. Okay, now we're into updates proper. Goliath put out news this week. They started their program recently. I think it was about 8 or 9 days ago, and man, did they hit the ground running. They actually have already encountered visible gold in one of the drill holes. In fact, one of the first drill holes they drilled to actually test some of the dikes that they found late last year. They found a series of dikes that have disseminated gold associated with these little quartz veins. You know, reduced intrusive style gold. Yeah, it looks like a reduced intrusive. It's not exactly the same as, say, what we see up in the Yukon, but it's pretty darn close. You can see the images of core down there, and you can see the bright little spots. Those are specks of EG. All right, so very encouraging. Now let's see where this drill hole is in context. Let's go to the next slide. And you can see the hole that has a little white or red box with the white center. That is this drill hole, okay? And the pink slices that you see there, or upright features that you see, are the dikes. Okay, that brown one is also a dike. Okay, but they highlighted the one they've actually intercepted in brown to kind of distinguish it from the rest. But you know, if you think, well, gee, there's 2 holes that were drilled here previously that actually hit gold mineralization, and the little inset boxes that point to the red, those 2 intercepts are pretty darn good. I think one of them is like 10 grams over a few meters. Can't read the darn numbers because they're too small. You can go to the news release and read it yourself. But the fact that they were able to drill this dike again, or target the dike again, and drill across it and hit VG and quartz veining like they've seen in previous holes on the first go is very encouraging, because that means they have a predictive model they can use to now test all of these dominoes and see if they can make more discovery or build continuity along them. So these things in their own right, this is aside from the flat lodes, okay? We have all those flat lodes, the Sherbet lode and the Bonanza ledge and so forth. All of those are still here, but now we also have these subvertical features that might in their own right be decent gold targets and potentially economic discoveries. Okay, so this is a good first step, first hole of many. These guys have a massive drill program this year. I think they're targeting something like 40,000 meters. But this is exciting. Seeing that, I think this company is going to have more news than we can probably see a news release every other morning, quite frankly. Anyway, let's go to the next slide. All right, Hand & Metals has put out some news on Provisto, but they also talked a little bit about the first drill hole at Bellin on one of the porphyry copper gold targets as well. But this news release, which came out a couple of days ago, talks about expanding the gold zone. They now see an extent of the gold zone about 650 meters along strike and around 100 meters wide. I think from what I can see in the map, it looks a bit wider than that. But, you know, this is starting to grow. Like we're starting to see a major, major gold discovery take shape from the data they're collecting, which includes a lot of trenching and other forms of sampling. All right, let's go to the next image. Okay, this is the Valiente project. It's on the eastern side of the Andes in Peru. Notice that there's multiple targets here. All the little tags around this yellow box are basically labeling the different targets that have been identified at Valiente. Provisto is in the north part. That is the alkaline gold system, and that's that meat of this news release. Basically, most of this news release is about the expansion of this gold target that they found at Provisto. But don't forget, they also have a series of porphyries at Belen, which is to the south. It's more the south end of this block. All right, we'll talk about that at the end. Let's go to the next slide. Okay, this is a little bit, you know, of a orthogonal bird's view of the Provisto target. The yellow outline shows the gold anomalism as defined by stream sediments and rock samples and so forth. But what they're doing right now is they're going in there and they're digging trenches in various areas, and they've identified this one, like that bright red area, as being a cohesive, coherent gold anomaly that's 600 meters in strike. I think it's actually 650, and it's around 100 meters wide. Okay, so this is exciting. They basically already found a major, we'll call it, you know, outcropping gold system at surface. But the yellow dash line is telling us there's lots more here. This is an absolutely massive gold system that could deliver something that just blows us all away. Let's hope. Let's go to the next slide. You can see here, now we're looking at a bird's eye view of the gold anomaly. Again, about 650 meters along strike, probably averages about 100 meters wide. And it's defined now by multiple trenches. We have multiple trenches up and down this thing that are all encountering significant gold. We also have rock chip samples and other data, stream sediment and so forth, that are really defining a cohesive body of gold mineralization here. Don't forget, we have some very high grade in some of that, in some of those trenches, particularly in that inset map. We don't have the inset image available here right now, but basically there were high grade gold veins. We'll call them alkaline gold veins. They have a lot of what we call roscalite in them. I find it very encouraging. Sounds esoteric, but basically it's a key indicator of an alkaline gold deposit. And I get really excited about alkaline gold systems because these things can be big. Okay. And this is a brand new one that has never, ever, ever seen any drilling. They're not drilling here yet. They will be in a few months once they get the permits. But just the work that we're doing right now is great. It's starting to expand this, show us that it has scale. All right, let's go to the next slide. Now, they did talk about the first drilling that they have at the Vista Alegre target. And really, they've only finished one hole to date. I think they started drilling about a week and a half ago. And they completed the first hole, which you can see with the label and the white arrow there. Now, this is a geophysical view. It's kind of tipped on its side and then cut, you know, through the earth. So we're kind of looking at an oblique view of both sectional and plan level data that, you know, covers this target, this Vista Alegre target. Now, the bright colors that you see are reflecting, you know, electrical zones within, or I should say, chargeability shells of places where the ground actually becomes charged when they pump electricity into the ground, and it holds electricity. Well, what does that mean? Probably sulfides are present. Sulfides are often associated with mineral deposits. Now, the yellow triangles that you see there are surface samples that were gathered. So there's a pretty broad area here where there's significant copper and gold, and we're seeing it right on top of these areas that are clearly chargeable. And so the company is focused like a laser right now on testing these very large, very robust targets. Let's go to the next slide and look at this in section. Okay, so that geophysical data, the chargeability, can be extended down into the subsurface. This is a cross-sectional view that's sliced right through that electrical anomaly. So the pinks and the reds are areas where the rock is quite chargeable. And you can see that first drill hole they drilled, which is a solid white one, it kind of glanced across the top of one of these chargeable features. And they were clearly excited enough about this hole that they are now drilling a second hole. You can see the dash line. That is a second hole, and it tests that chargeable feature a little bit deeper. Okay, why would they drill that hole so soon? Maybe they were excited about what they saw. Look, there's definitely samples at surface. You can see the yellow triangles there. Those are samples that are probably shed off of this area that are highly anomalous in copper and gold. And maybe the company is kind of stepping into it with their drilling. You know, that second hole looks like it could be quite exciting. Let's stay tuned. Maybe they hit something here. Let's go to the next slide. Okay, Snowline has a couple of news releases. Firstly, they did announce the addition of a management team member who's in charge, basically a VP of Environment and Permitting. Okay, this Oliver Curran is now in charge of their environmental and permitting of this project, and this is a good sign. Okay, companies that do this kind of work, build up their team, they're taking this thing forward. Okay, they need to do that. This is a world-class deposit. It is really a company maker level deposit, and bringing in the right people to develop this thing, advance it through the next steps, can help short circuit the the timeline and so forth that it's going to take to develop this thing. Really happy to see this. Scott always makes the right moves. Very proud of the team they put together. I think this is looking very good. I'm quite anxious to see the guys because I'm going to go up there in mid-July. Let's go to the next slide. Okay, they did announce also that they've commenced their fully funded 30,000 meter program. Okay, they're going to go aggressive here. They're going to do some more infill and expansion drilling here because there is, as I talked about recently on a video, there is room to grow. But they're also going to follow up on some of those results they had. So you can see the breakdown of the meters there. That last bullet that you see, there's 10,000 meters allocated for first pass and follow-up drilling at least 5 additional targets across Rogue and Cynthia and the Einerson projects. Okay, this is very good. This is a very good program. They're going to be doing a lot of work at Valley, working to do to take it through a bit more expansion, infill, obviously add ounces, but they're also going to test some of these new targets and fairly aggressively. 10,000 meters is a lot of meters. So good on them. Let's go to the next slide. Okay, Sitka has some very exciting news. They've actually been drilling more aggressively now. The winter's kind of passed, starting to see that melt, but they've put on more rigs out there, and they have a big program, 30,000 meter program this year. Okay, and they're going to be drilling all summer long, just pell-mell, which is great. I'm glad to see this. They did extend hole 76. They had a big run of gold in that, and they extended it. They took in another 130 odd meters. What does it mean? Well, they're seeing VG in that. Okay, so I think that's really exciting. We might actually see a significant addition to the gold intercept that was reported a while back. Stay tuned on that one. All right, but they've also been drilling some new holes, and they've seen VG in those as well. Let's go to the next slide. Okay, this image shows you a plan view of the Blackjack Eiger area. It's also got that saddle zone between. And the little green polka dots are where the new holes are in. And 70 and 79 are in Eiger. Guess what? They're seeing VG in those. That's really, really encouraging. They're also seeing visible gold in hole 80, which is over here at Blackjack. They don't mention visible gold in 81 yet, but they were just starting it. And that's in the saddle zone. And they're hoping that saddle zone actually bridges both Blackjack and Eiger together. And I'll bring that together in a slide here in a minute. I'll show you what I mean. Let's go to the next image. Okay, this is gold in soil anomalism. So all the bright colors that you see here are measures of gold in soil. It's clear that the saddle zone is a big part of this system. Yeah, the Blackjack is to the left of that and Eiger's to the right of it, but the saddle zone has a lot of mineralization coming out of it. Okay, this is very important that they test this area, because if they can bridge these two zones, I think we might see just a quantum leap in the tonnage of rock that they develop, that they advance into a resource here. Okay, so hole 81, even though it's early days and we don't have any evidence of gold in that yet, be quite anxious to see what they come up with here. All right, now we're going to talk briefly about these other drill holes, both at Blackjack and Eiger. Go to the next slide. And these images kind of speak volumes. Okay, these are all photomicrographs. So they zoomed in, they've taken pictures of gold grains in the core, and you can see which holes they come from. Firstly, hole 76, which is up there in the upper left, that's some VG down in that extension in hole 76. It's a hole they released a few weeks ago. They've extended it, and they're seeing VG carry on down deeper into that hole. Well, I think that's very exciting, because that means that system is just ripping on, to depth in that area. So we'll be anxious to see what they come up with there. But notice that holes 77, 78, 79, and 80, all of them have quartz veins with visible gold, as you see by the photographs here. So this means that both Blackjack and Eiger are generating really strong visible evidence of good classic reduced intrusive gold in quartz veins. Okay, this is very exciting. I think we're going to have a long stream of good results this summer, but we'll also see that picture develop where Blackjack and Eiger start to connect, and then the deposits to the south, don't forget those. Let's go to the next slide. What I mean by that is this. Okay, this image is basically a sectional view. It's like looking at the Earth sideways. And north is over here on the left-hand side, south is to the right. And you can see where the Blackjack and Eiger deposits are. They kind of look like they're sitting side by side, but they're actually like one's in and one's out. So Eiger's in the distance. Blackjack is kind of more close to our eyeball. We think that based on that drilling that's going on right now, there's a connection in the saddle zone between those. Great, happy days. But notice that as we go southward to Pulkeman and Rosgobble, there's a lot of holes in that area now that have good gold mineralization. Can you imagine what this thing is going to look like after we get 30,000 meters of drill holes through here? We could see a whole forest of gold kicking off of this thing. And remember the upside down cow? Okay, we're starting to see all the teats off the udder poking up here, but there's still that chance to find an udder underneath. Okay, this is very exciting, because that scale is huge. It's 5 kilometers. All right, it's going to be a very exciting story for this company, and people that live and die by drill hole to drill hole. That's crazy. Okay, this is a great story, and it's going to, sometimes they won't hit high grade or something like that or whatever, but that's Mother Nature. But the fact that we have gold distributed over such a broad area here, I think is very encouraging, and the 30,000 meters is really going to enlighten us on what's here. All right, let's go to the next slide. All right, Tectonic has launched their drill program, and they got a good run and start here. So here we are in early June, and they're already drilling. Praise be. Okay, the company got the cash it needed to get out there with 3 drills and start drilling at the Flat Project. Now, this is in Western Alaska. This is a reduced intrusive, like the stories at Snowline and Sitka, but it's way over in Western Alaska. And where they're following up is going to be this alpha bowl. Like, first and foremost, they're going to drill in this alpha bowl area, which firstly generated most of the placer gold in this district. So we know there's a lot of gold coming out of this little drainage. But they also had a drill hole last year that was, in my view, a discovery hole, like a discovery of a nice high-grade reduced intrusive system. Okay, it was 65 meters or thereabouts of about a gram and a half, I think, of gold. They're going to go in there and start following up on that. And hopefully we see some results very quickly in terms of visuals. I think, I don't know how the company's going to release information to the market, but I hope we get some taste like we did, say, with Snowline a couple of years ago when they really latched onto the Valley discovery. And we start to see some drill holes that show those sheeted quartz veins and all the bells and whistles we love to see in these systems. Because I think this is going to turn into one of the most important gold discoveries in Alaska in many, many years. All right, let's go to the next slide. Just a quick view of the gold system at Flat Mountain, or Flat Property rather. Chicken Mountain, which is the area with the bright colors there. We have a lot of drill holes through that area. We also have a lot of soils and stuff that tell us it's good gold over a very long distance, about 3 kilometers there. But notice over here on the left, Alpha Bowl is the area that's kind of the northern extension. North is kind of off to the upper left. Alpha Bowl, that kind of brownish patch that you see in interior to Alpha Bowl, that is the alluvial gold that's been mined here. Okay, that kind of brownish shading marks the alluvial system that was mined. Huge amount of gold came out of that basin, 650,000 ounces. Well, where'd it come from? I think they found it. Okay, I think right underneath that alluvial deposit, that is where they found the best grades of reduced intrusive gold so far. Okay, they hit 1.22 gram over 65.53 meters, and that included some higher grades. And you can see in that brown box over there on the left-hand side some of the breakdown of those numbers. They're going to follow up drilling more holes in there soon, and we're going to know very quickly if Alpha Bowl turns into be a major new discovery. It'd be a delight to see them find the higher grade part of the system. I think they have a lot of gold here, but boy, finding that higher grade part first, so that you can build a mine, that's key. Fort Knox started out about 0.95, 1 gram, somewhere in there. And then through time, as the cutoff, the capital got paid back and the cutoff was able to be lowered, it's now operating more like 0.4 gram or something like that. But the key with these systems, you find that high-grade plum. They have it at Valley. Maybe they have one here. That's where you start your mine. And then you just basically have a huge ocean of gold mineralization to mine over time. So this is, in every respect, this is a system that has the capacity to have a huge endowment of gold. All right, let's go to the next slide. I think we're getting to the end. Yes, I think we did. Now, I probably missed one or two stories. I got to say, being in Australia, trying to keep my eyes open sometimes in the middle of the night, it's kind of challenging. If I did miss some stories, apologize, but I will try to pick them up in the next video. All right, guys. Thank you very much.
All right. Thanks, Quentin. So some exciting updates in the field from Quentin, and the last company he was talking about, Tectonic. That is one of my personal most interesting stories that I am eager to follow here, as they have already started drilling, and I'm just really excited about what could potentially unfold for Tectonic this drill season, and we are wishing them the best. So if you are interested in learning more about our strategies, we encourage you to reach out to Merrick Iwahashi. He is the head of investor relations here at Crescat, and he is just a really nice guy who would be happy to talk to you about anything, any questions you have, and any interest in our strategies, about learning more. He would be happy to talk with you and get you some more information. I am really excited about some of the opportunities in the market here. We've had some big turmoil to start 2025. We're not even halfway through it yet, but we saw a big dip in the market, and then a big recovery, and here we are, just almost retesting the highs of the U.S. stock market, the S&P 500, the Nasdaq, from earlier this year. And I think there is a lot of opportunity for our themes for our strategies to still deliver some good performance here into throughout the rest of the year. I'm really excited about our themes and our positioning, and I think we're going to see some more turmoil. I really do. Started to get a little bit of a taste of it yesterday in the market, and here we are just kind of drifting up again. But there are catalysts, as we've talked about and as we've written about, for a number of important shifts in markets and positioning. Valuations are a problem for the S&P 500, and yet at the same time we have a lot of deeply undervalued opportunities in the commodity sector and commodity equities, and a lot of catch-up trade. We still think it doesn't mean if we get another correction in the market at large that gold stocks might not also get caught up in that to some degree. But like we saw in April, even after the market crashed, the gold stocks were the first to reemerge, and I think this is I really, like we've gone over many times, I don't think this is another 2008 type of a setup for a market crash. I think it's much more like an early 2000s tech bubble type crash, or a 1973, 1974 type stagflationary market environment, where you can see depressed, undervalued mining stocks and precious metals really outperform and go higher, even as overvalued mega cap tech stocks are entering a major bear market. And we still think it's early for that. So if you want to talk through these themes some more, give us a call, give Merrick a call. We look forward to talking to you. Kavi, any closing remarks?
I think one of the importances of what's been happening recently with the big, beautiful bill now changed to big, ugly bill by Musk, and the whole conversation regarding that has become very political. But if you actually go deep into reading or understanding what's in that bill in regards to the mining industry, I think there's some of which I believe it's going to be passed because most parties would agree with that, and has nothing to do with overspending or anything like that. But it could be fundamental for the industry overall, as we see. I wrote it down here. There's a few changes that I think are important in terms of tax credits that are going to be transferable, in terms of extraction cost and all these things. So if you think about it, there's almost changes that could be very beneficial for all parts of the industry. Potentially, producers from a shift on margins regarding how things are going to be treated in terms of taxes. Number two, how that transferability of those tax credits for extraction cost, make you think about how it could even cause or stimulate a M&A curve even further, by making the producers looking into small early stage projects that have a lot of those extraction cost tax credits likely to become more and more attractive as well, and streamlining a lot of the development phase of the industry overall. I think that all these things are going to be fundamental changes in this industry and are very much off the radar of giving all these face off between the two, and the issues between that are very political, that have nothing to do with those potential big shifts in the mining industry. So I think all of you should spend more time reading that than what's been happening between Musk and Trump. Especially given the fact there's so many people that are involved in an industry that are part of this, and so read the changes that I think those are likely to be agreed on any of the changes that we're likely to see here in the following days. So that's it that I have for this as well. So if you liked our videos, and please subscribe to our channel here at YouTube, and also follow us on Twitter too, or X. But thanks everybody for listening in, and we'll be back in 2 weeks. So thanks everyone, and thanks again for watching.